What would you do if you had $10,000 to invest and wanted to create passive income? If you're looking for smart, effective ways to put that money to work and some ideas on how to do it, you've come to the right place. Hi, I'm Halliday. I got started in the markets almost 25 years ago, nearly a quarter century. I've gone on to teach hundreds of thousands of people how to invest in the financial markets. I previously worked on Wall Street for a New York-based firm as a Series 4 option principal, which is the head of option trading at the firm. Today we're going to talk about what it means to invest for passive income. I'll share a few tried and true ideas that I've utilized in my own life and some of my favorite methods for making my money work for me. Stick around till the end and you'll learn how to put that $10,000 to good use. What is passive income? It's money you earn with little to no daily effort. It's the dream for many investors. It's the idea that your money is working for you even while you sleep. And that's a very powerful process. There's a famous book called The Richest Man in Babylon. And in that book, it talks about how as you earn money, that money is now earning more money if put to work in that compounding cycle. And then the way that that compounds is truly amazing. There's an analogy where somebody says, well, would you rather have $1 million now, or would you rather start with a penny and have it double for a month? Which one would you choose? And a penny doubling every single day for a month becomes worth way, way more than the $1 million. And that's hard to believe, but that's how powerful compounding is. So we know that in order for us to be most successful, we need to give our money time and a great return, and then it compounds. But if we're talking about passive income, it means we start with some capital, like $10,000, and then there are some ways that we can put that to work. Now, one of my favorite ways is in dividend stocks. In a dividend stock, you have a company that's out there generating profits. And here I have a gold piece. It's a Krugerrand, South African Krugerrand. This gold piece represents profit. If you have a gold mining company, as an example, they're mining the ground and then pulling out gold, which they can convert into coins, right? Or if you have Apple, they're creating phones, a product that people buy and sell. If you go into Costco, they're selling items and they have profit margins. They get a profit off of every item they sell. So this represents the profit. Now, in a dividend, we can cut this profit up, right? We can cut it into little pieces. And that's what a dividend represents, is once the company has a profit, they can cut that and slice it up and send it out to the shareholders. And that's what dividend stocks do, is they'll take the profit that's generated, they will split it into pieces, and they will send that out to their shareholders. Now, many different companies pay different amounts of dividends. Sometimes you can find a high dividend yielding stock, something that's paying above 5%. Sometimes they're a lower yield, 1 or 2%. The most important factor is that it's a great company, that those dividends are going to continue, and that gets back to fundamental analysis, something that we teach where we can identify the very best fundamental dividend companies and which ones are most likely to be able to sustain their dividend. So dividend stocks, one great example. There are, within the dividend community, stocks that have a long track record. They call them dividend aristocrats. These are companies that have paid a consistent dividend for decades. Those companies want to continue that trend and want to continue to pay those dividends for many, many years to come. So as you do your research, those dividend stocks can be an opportunity. In addition, we can teach you strategies and you can learn how to generate option income. And this works very similarly. You can generate profits off of stocks you already own. So when you own a stock, it could just sit there, or you can make promises against that stock. You could say, well, I'll sell you my stock, but you have to pay me money for the right to buy it, and you have to agree to pay a much higher price. So let's say the stock is trading at $100 per share. You can make a promise to sell it if it gets up to 110 in the next month. If it goes to 110 or higher, you would have to sell your stock or buy back that promise. But as long as it stays below 110, which it will most of the time, most stocks are not going up over 10% per month. So most of the time that call option will expire. Most of the time you get to keep the premium without having to buy back that option and roll it out and do some different trade management principles. And so there are ways to generate income on stocks you already own. That is another strategy where you can generate, and I guess we could call that active income, but it's fairly passive. There's not a lot of work involved. It's simply selling an option and then monitoring that trade over the next month to make sure that that option expires. And if it's not going to expire, then there's some management to allow us to keep the stock and then resell another option in its place. So there are amazing opportunities, even with smaller amounts of capital like $10,000, to begin that compounding process. So if you're ready to invest in stocks but aren't quite sure where to start, be sure to check out our beginner's guide to investing in the stock market. Also, if you found this video helpful, don't forget to like the video, subscribe to our channel, hit that bell notification the next time a video comes out. We hope you enjoyed it. We'll see you in the next one.